ladies and gentlemen. Welcome back to Reserved Investments. So let's talk a little bit about the high-end art market. Now, every time I do a video like this, it just doesn't get a lot of views because a lot of the subscribers to this channel want to see me talk about pop culture collectibles, markets that govern pop culture collectibles, and general advice on how to speculate, flip, or invest in those type of collectibles. But as I've said before, the entire antiques and collectibles trade is not centered around pop culture collectibles as much as a lot of you guys that spend a lot of time online think it is. Believe it or not, a lot of the higher profile markets that make up the antiques and collectibles trade are art, coins, currency, historical documents, first edition books, overall historical artifacts and objects. Pop culture collectibles are more on the speculative side of the trade, with few exceptions. There are certain types of pop culture collectibles that are coming into their own. For instance, if we're talking about a copy of Detective Comics 27, first appearance of Batman, or Action Comics 1, first appearance of Superman, those particular items can be considered part of an established market. It doesn't mean that they're not still a little bit speculative. But overall, if one of those pieces goes up for auction, we know it's going to sell. We know it's going to have heavy demand. Now, on the flip side of the equation, a lot of high-profile auction companies like Sotheby's, Christie's, Phillips, Bonhams, they are dependent upon the high-end art market. So every time there is a downturn in the higher-end art market, a lot of these auction companies, believe it or not, start to struggle. Now, I know a lot of you guys are really focused on certain collecting markets, and you come across catchy headlines that tell you the entire collectibles trade is expected to go from $600 billion to $1 trillion within the next X number of years. And that is true, but what you have to understand is that inside the entire antiques and collectibles trade, a lot of these markets are changing, moving, and evolving at a fever pitch, meaning these markets are making different moves. Some are going up, some are going down, some are staying the same and going sideways. Other markets are entering and gaining momentum like we're seeing right now. There are certain upcoming pop culture collectibles that are putting a dent in the overall collectibles trade. More specifically, you have collectible card games. You have video games that is considered a newer collecting category. It's very speculative at present time, but make no mistake, vintage video games as a collectible are not going away anytime soon. Now, if we really want to spend some time talking about the higher end speculative bubble that occurred in that market, yes, there was a shakeup in that market, but collectors aren't leaving that market in general. It's just big money isn't flowing into that market like it was before when, I hate to say this, prices were pretty much artificially inflated. Let's use that terminology instead of using the term market manipulation, which would also fit, to be fair here. Now, talking about the art market specifically, one of the biggest problems that happens in the art market, with it being a very cyclical market, is when stocks, bonds, interest rates, real estate start trending at all-time highs. There is always a pullback in the higher-end art market because those buyers are chasing gains in other asset classes. This is why there is generally an inverse relationship between all types of antiques and collectibles and that of overall financial assets in the general economy, by and large. So this is why when I tell you guys, if you diversify into antiques and collectibles, you are in a better position than somebody that comes to me and says, Sean, I'm not taking your advice. I'm going all in on Pokemon cards, great at video games, art, comic books, whatever it is, because you lose the diversification aspect of investing in these markets. And if you studied finance, you would know diversification is one of the only free lunches you get in finance and economics. Now, there's an excellent article that premiered in the Wall Street Journal, and I wish I could link it in the video description below, but I think the article resides behind a paywall. I personally, at present time, do not subscribe to the online portion of Wall Street Journal. If this was actually a paper article, it would be better because I could just sit here and read it to you. But by and large, this article is behind a paywall. But the article's title is "The Art Market is Tanking. Sotheby's has Bigger Problems." So I did take a screenshot of part of this article, and I just want to read you 2 paragraphs here to get you to understand where I'm going with this. Here is from the article. The crisis at Sotheby's comes at a time when the entire art market is reeling. Over the past year, collectors who see art as a financial asset have winced as higher interest rates and inflation made it more expensive to trade art. Contemporary art buyers have also suffered sticker shock after years of paying ever higher prices for emerging artists who may never pay off. Some smaller galleries who rely on collectors to vouch for unknown artists have shuttered, while dealers have reported lackluster sales at art fairs. Those factors have hurt collectors' overall confidence. I don't feel like there's a bunch of collectors waiting out there to save the day this time, said a well-known art collector. So this is something that you have to understand when we talk about high-end art. There's the modern masters, the paintings that sell for hundreds of millions of dollars. That market ebbs and flows, but that is the most sophisticated and mature sector of the entire antiques and collectibles trade, and also of high-end art. Then you have your emerging contemporary artists, which, make no mistake, are part of a more mature and sophisticated market because they're also part of the overall art market by and large, but it's more speculative. You're taking a risk when you put your money in lesser known emerging artists because, again, nobody knows how these artists are going to be remembered or looked back upon years from now. So it's almost like when we compare the high-end art market to that of collectibles, if we want to look at like comparing art to Magic the Gathering cards or Pokemon cards, it's almost like you have the modern masters, the coveted high-profile pieces that make up the art market versus emerging artists. And if we're going to compare that to contemporary card games, that would be equivalent to comparing something like a Magic the Gathering Arabian Nights, which is a highly coveted vintage Magic the Gathering set, to a modern era set that's being produced right now. So that's how you kind of have to look at this. So when you analyze it through that lens, it makes perfect sense. Obviously, higher-end buyers are more perturbed by changes in the overall economy. Because think of it this way. Even if you're just spending $500,000 or a couple of $1 million on a piece of art, if you can get 5 to 6% in a money market fund without taking any risk, without paying virtually any transaction costs, that's a much safer bet than buying a piece of art at a possibly inflated price. Now, the other piece of the equation we got to talk about here, when prices tank in any market, whether it's art, antiques, collectibles, there's less people that are going to come into that market and be willing to sell unless they're forced to. This is another reason why when I tell you guys, you're better off diversifying in these markets. If your complete position, meaning your whole financial position, is geared towards antiques and collectibles, if the market tanks and you're forced to raise capital, or you need money for something, or even you want to sell something and buy something else, if the market is tanked and that's all that you have, that's the only assets you have, is that commodity, you are forced to sell into a tanking market, and you're going to get a lower return or possibly take a loss as a result. So there's many different dynamics when we analyze these markets as to how properly to allocate capital to them. But if you're somebody that is looking to get into the art market, you have to use caution, because this is where I always get asked, well, Sean, if I'm looking to buy in, now that the art market is pretty much tanking, is it now a good time to get involved in this market? The problem is, if you're going after emerging artists, this is more like speculative collectibles. There's no guarantee that these artists are going to be sought after. So how do we know if you are buying at all-time low prices that the market isn't going to even drop further? This is something where collectibles have that type of added risk, where something like an S&P 500 index does not. Because if you invest at an all-time low with an S&P 500 index, yeah, there's a chance over the short term that that index can drop further. But overall, through the health of the economy, through the actions of the Fed, through the actions of just the general government by and large, that's going to probably recover a lot quicker than a market that is pretty much governed simply by supply and demand, with no other economical resource taken into account. So this is something that you really got to understand when you're investing in these markets. If you wanted me to do another follow-up video on this, please let me know in the comment section below. I just wanted to touch on this because I think that there's an excellent parallel here based on just this article and the fact that the art market is tanking that we can use to compare to the risks of investing in antiques and collectibles overall. And I think that that's worthy of a discussion. Thanks for watching, and I will see you in the next video.